Hello, good afternoon. It's Adil Fazal, market analyst for CFDs.com, bringing you a review of European markets today, the Wednesday, the 2nd of December, if I can recollect. Yes, it is certainly the 2nd. Okay, let's try and sum up the actual price action this morning and the news flow as well. So, obviously, overnight we had the US markets with stellar gains, futures rising quite substantially. Very strange price action or should I say very strange strength, given the fact that we had weak economic data. But the thought process there was the fact that we had a weaker economic data, which generally means that Ms. Yellen or casts doubt on a potential rate rise going forward. Although we do know that they're locked into December, but thereafter it will be very shallow, and the actual rate expectations going forward certainly head back. Therefore, that led to a rally on the US markets, quite a substantial rally as well, on the back of obviously stronger European data. Now, overnight we've had the Shanghai up quite substantially, up 2.3%. The Hang Seng almost 0.5%, but the Nikkei is lagging. The Nikkei is weak. That resistance zone at the 20,000 level certainly is holding strong. So the gap level that we can see on the Nikkei itself, which I did highlight yesterday as well, we have this gap fill, and it certainly is holding up this rising contracting wedge pattern onto the downside. So again, bearish, and you have an unfilled gap below as well. The Shanghai, even though we had a rally on the Shanghai at 2.3%, we still haven't negated the almost 6% drop last week. So again, that's certainly something, on a Friday, I think, or Thursday. So again, this is important. So this was on the 27th of November. We are just consolidating within that. So we've retraced almost 50%, and it certainly looks like the bears certainly are still in control. Okay, so certainly a risk-off scenario remains. Okay, now in terms of European markets, so ever since yesterday's economic data out of the Eurozone, it certainly has strengthened the bulls in terms of the Euro USD, and therefore it negates any further need for QE. And given the fact that we have the bonds still holding that resistance zone, so if I just bring up the chart of the bond, okay, you can see the daily chart here is holding that double top, and therefore you are looking at a potential bond drop from here, and that means a euro rally. Okay, and that's basically the expectations thus far in terms of the actual markets themselves. So given the fact that the euro is now putting in a pivot low or pivot bottom, even with today's weaker inflation number, we still are holding the 1.06 level. So therefore, from that summation, or from that conclusion, one can state that the euro certainly is putting in support here now, and you are looking at a potential rally in the euro higher based on risk off and risk aversion, and that will obviously cause the European equities to fall. Now the equities have fallen already quite considerably. We have the German DAX down almost 0.6%, the French CAC down 0.5%, and the FTSE is probably the only index that's outshining today, but that will not last because we have Sage down and we have weak UK construction data as well. So let's try and look at the actual markets themselves now in terms of the price action. So the daily chart's still holding the 200 MA resistance. We do have the inverted head and shoulders on the larger scheme of things, but at present it certainly is bearish, given the fact that the euro is certainly holding support, bonds are holding resistance, and therefore you are looking at a lack of, or Mr. Draghi potentially of disappointing us all. Okay, now especially given the fact that the economic data out of the US over the last few days has been exceptionally weak, and therefore the divergence trade certainly has come to an end. Okay, so let's just bring up a chart of the Euro Stock 600 as well. You can see that we are testing that upper channel resistance in 200 MA, so therefore it remains weak. The Euro stocks and the Europe 350, still holding that 200 MA, and therefore still remains weak. Going to the Euro stocks again, so daily chart still struggling at the 200 MA. Bringing up the 60-minute chart of the Euro stocks, you can see that we are now putting in a potential HNS formation. Okay, so you are looking at a HNS on the actual Euro stocks itself. So therefore, you are setting up for a potential disappointment in terms of Draghi. So we have failed to hold previous resistance equals support. Okay, so we are now in this zone. Currently, it's at the 3470 zone, and the HNS certainly remains in play. So the bulls have certainly lost steam here now, and the bears have certainly taken over. You are looking at a potential 200 MA touch. If that fails, and you are looking below at 3390. So bias certainly remains bearish at this juncture. Okay, now Looking at your other indices, just to confirm and cross-verify, the German DAX, like I said, this diagonal trend line certainly is holding very well. Ever since we closed this gap here, the German DAX certainly has been wilting. Looking at the 60-minute chart of the German DAX, again, you also have a HNS formation in play, which I did explain yesterday for a potential right shoulder, then obviously a drop. Now, we are looking at testing this 11,150 zone on the German DAX, and if that obviously fails to hold, then you are looking at the 11,000 level. You do have an unfilled gap at 10,700, so certainly keep an open mind and realize that all possibilities or all eventualities can unfold. Okay, now in terms of the French CAC, let's go over the French CAC for you as well. This is a mess on the 10-minute chart, so please do excuse me. Daily chart still holding that resistance zone, still obviously relatively relative weakness overall. You do have a same type of pattern. You have the HNS formation on the French CAC too, so you can clearly see that here. So your left shoulder is here, your right shoulder, obviously we've put that in today, and relatively weak, and now we are looking at further falls or further declines. And the 4780 certainly can't be ruled out. You have this gap level here at 4820 as well. So again, these are all possibilities and scenarios that can unfold. Okay, now the FTSE 100, let's have a look at the FTSE 100. We're still at that 200 MA resistance after breaking out this diagonal trend line. Looking at the daily chart, you can see clearly horizontal resistance is holding at this 6430 level. Anything higher, you're 6440, 6450, 6500 even resistance on the FTSE, but we are currently stalling at present. Going to your 60-minute chart, you can see that this rally certainly has come to an end, and you are looking at potentially revisiting the 6400 zone. I currently remain short from the 6429, and my target is 6400, so I'll declare that. That's my current active trade. Okay, but I was stopped out overnight though. I did attempt to short the FTSE at 6395, stopped out at 6427 overnight. Okay, so 60-minute chart certainly remains weak, and we are looking for further weakness. I did tell subscribers that we have this rising contracting wedge pattern. We are going to break to the downside, and that's exactly what's occurred. And we are now potentially testing. You have support down here, which is 6410. You have support down here at 6400, and they're the two support levels that we are going to potentially test. If obviously that fails to hold, then you are looking at the 200 MA, which is at 6385 in terms of support on the actual FTSE itself. So that's going to be interesting as well going forward. Okay, I think that's a good summation. Again, UK markets are subjugated to a larger degree because oil certainly remains weak, currently at $40. Copper remains weak, currently at $204. Gold price is certainly pushing lower at $10.65. And given the fact that the US markets are now into potential resistance as well, given the fact that euro, it's all about the euro's into support. The Kiwi and Aussie certainly seem to be exhausted as well in terms of the FTSE. If I bring up a 10-minute chart, you can see we've hit that double top. No higher highs even after a stronger Aussie GDP number. And the Kiwi, even after the dairy auction, we're still failing to push higher. So given the fact that the daily charts now are both into resistance, it tells you the dollar is into support. And that basically means, given the fact that we also have Yellen talking today as well, and that certainly does not bode well for the indices themselves. So certainly looking for further downside price action. Okay, folks, I think that's a wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.